Okay, we have an exciting case study today. This is how my client, Mark K, made a 30% return in 1 year with minimal options trading, very minimal. Okay, so Mark made $5,000 to $7,500 per month. His portfolio size that he was options trading on was 250K. When Mark came to me, he knew the wheel, but he was lacking the confidence that it worked. Okay. He needed help refining his strategy and finding the missing links as to how to make this all work for him. He also needed some consistency. Okay. So again, one of the things that I just want to highlight here is that Mark was doing this so minimally, and we're going to talk about that in just a second. Okay. So he made a 30% return in a year. He also made $78,000. Okay. So he spent less than 2 hours per week trading. If you talk to him, he said it was so easy. He avoided taking on excessive trades. He only did 2 to 3 trades per week. Okay. He didn't take on excessive risk that kept him up at night. And he didn't chase those high flying stocks that he was used to or tempted to trade in the past. He was able to stay conservative, which is in his true nature and true to the level of risk that he was comfortable with through this whole system that he learned with me. So this video is a game changer for so many reasons. If you are a high net worth individual, like so many of you are, and you're serious about getting better at options trading and taking some of that cash that you have invested in the market or just cash that you have, still weigh your phone and pay close attention, because you have the capital to really just get yourself like a second or third revenue stream that's consistent for you. Okay. So the truth about options trading, okay. The truth about options trading is that you absolutely can generate consistent income with options trading without spending countless hours analyzing charts or taking on excessive risk. All those people that say it's super risky, what they're doing is they're buying short dated calls and puts, or they're trading shitty stocks. Okay. So yes, there are ways to gamble with options. That is not what we are going to do here. The truth really is that the hardest part about options trading is coming up with the capital to begin with. And the more capital you have, the easier and more profitable it gets. I mean, that sucks for people who have a smaller account value. It sucks. I've been there. Okay. But I can just tell you that when you get over the 100K mark, as far as money that you can put into options trading, and over the 250K mark and the 5, it becomes so easy and so profitable. People ask, if it's so easy, why doesn't everyone do it? And most people aren't capable of trading just because they don't have money to put into the market. Or if they do, they simply don't have the education to understand what they could do with it. This is something that when I tell my friends I'm options trading for a living, they're going like, oh my gosh, isn't that risky? Or da da da. I'm like, no, not when you have a lot of money. It's not that risky. It's super easy. And then they say, well, why isn't everyone doing it that's rich? And I'm like, well, first of all, a lot of people are. They're invested in hedge funds, and the hedge funds do it for them. Okay. That's how hedge funds make money. And the second thing is that they just don't have the education to do it. They've fallen for the shtick that some financial advisors will tell them about, like, this is too tricky, this is too difficult, you'll never get it. Bullshit. You can get it. Okay. So don't worry. If you have like a retirement account or a cash or brokerage account, after watching this video, we can show you how to get your money working good for you. Okay. So before I tell you more about how to get these sort of results that Mark got and more about Mark and me, let's just talk about how I met Mark and my journey. So 8 years ago, I was trading a lot of different strategies, sometimes winning, sometimes losing, but never achieving consistent results I knew were possible. I spent thousands of hours, like just dozens and dozens and dozens of hours a week, studying the markets, testing different strategies, learning some trades that I come to find were too risky, so I threw them out of the system, adding trades in that were conservative enough for me to do really well on. And then I developed a system that allowed me to get 100% in a year. And then I did it again the following year, and I was like, this is really awesome. So now I make between $30,000 and $60,000 a month trading options with a portfolio of less than 600K. And last year alone on that 600K portfolio, I made $400,000 trading stock options. Okay. I do make more than that trading stock options. I have other accounts I trade in. I just don't tend to talk about them that much. Maybe I will in the future because I trade different styles in them. Okay. So at that point in time in my journey, I was on X, scouring for great follows, trying to find people I could learn from. And I was on like this secret account. Okay. That nobody really knew that I was searching for this kind of information. I was trying to find people I could learn from, only to find out that I knew a lot more about options trading, was a lot more successful than a lot of people on X. So I came to X 2 years ago, more than 2 years ago now, and started an account to actually showcase what I knew about options. Okay. You may be wondering too, like, why did you decide you wanted to teach options? Well, I own another company. And in this previous company that I have, that I still do have today, I managed commercial artists' careers and I coached them on growing artistically and from a mindset perspective, which I have an expertise in. That company I founded 20 years ago, and it was a bit of like life coaching for artists mixed with money and project management for the artist projects. It was a big job. I mean, it was like all consuming and the industry was booming, but I found that I loved the coaching part of the most of it. The rest of the job though, I did feel like leaving, like the project management and some of that finance stuff that was basically negotiating. I sort of got over the whole negotiating thing. But it dawned on me, like at that point in time, like, hey, I really love coaching. What if I could coach people on how to trade stock options, since I'm so jazzed about talking about stock options all the time and I want to talk about it all the time, but I have no one to talk to about it other than my husband, because not a lot of people trade stock options. So I decided, you know what, that's what I'm going to do. I am going to start a course and teach people how to trade stock options. And I took 4 months to design the course and make all the videos. And here I am today, 2 years later, and I've taught 120 people how to trade stock options. Kind of wild. Okay. So how I met Marc on X, where I started. And he took a big chance on me, handing over thousands of dollars for the program. But he told me yesterday it's easily worth double what he paid, because he has made $78,000 in last year alone. And he knows that this is a strategy that he can use for the rest of his life. And he's going to just make serious bank. Marc was attracted to what I did, though, and why he handed over his money and wanted to believe in it and put himself out there was because this system really does offer a golden trifecta of wants that people want, okay? And Marc wanted this. He wanted time freedom, he wanted financial freedom, and he wanted to kiss his corporate tech job goodbye. And he did. He did in a very short period of time, okay? So to tell you more about Marc had a great job in tech. Like, Marc really climbed the ladder. He's somebody that you and I would say, this guy's really successful and he's really smart. He is. He's incredibly smart. But he was 50 years old, and something happens around 50 years old. I was even at a girlfriend's sort of like mixology cocktail party last weekend, and almost everybody in the room that was like 47 to 50 years old, there was 70% of us that were going through a career change. 70%. So 7 out of 10 women there were like, I'm going through a career change. I'm changing because I don't really get fulfilled anymore from my job. I don't want to clock into a desk every day and then clock out of a desk every day. They were all looking into entrepreneurship and working part-time and fulfilling some of those other goals that they have in their life. So Marc was the same way. He didn't want to work anymore. He had done a really good job saving up a nest egg to be proud of. He had cash on hand, so he had a lot of power. He had access to at least $750K in stocks and cash. He also had more money that he wanted to use to open a business with his wife and become his own boss. So he boldly quit his high-paying job in tech to start his own business with his wife, with the idea that at the same time he could work with me to learn option strategies to get the side income from options that he would need alongside of his savings that he had to give his family some breathing room while they started their business. They have 2 kids, and these kids are coming up on college age from what I recall. So again, Marc was like taking some risks. A lot of people that trade options have an entrepreneurial mindset, and they aren't afraid to take some of these risks. Okay. They need to do it because they are people who are really going for it in life. They're just really going for it, and they're not afraid, because the idea of being stuck behind a desk all day scares them more than the risks that they're taking, because they're taking educated risks. They're not gambling. They're betting on themselves, and they know they can do it. So within the first month working with Marc, he made $4,800. And he also got to work on building a new sauna and cold plunge studio with his wife. That's the business that they started. I'm happy to report it's going really well now. And they had a great winter. Winter is their high season. So my point is that bold action often gets great and bold results. Okay. So it's now a year later. I'm checking in with Marc like a year later. Okay. He actually called me up to say, hey, I saw your tweet about a certain strategy that you're doing, and I know that's in the videos, but can I book a call with you, just have you go over it with me real quick? And I'm like, absolutely, let's talk. So he got it in 10 minutes, super bright, and it's easy to understand. But we had a chance to check in. So here's Marc's results that he told me about yesterday on May 12th, 2025. So it's a year later, and he's consistently making $75,000 to $5,000 a month. Last year, he made $78,000 in income that helped propel the family along and give them this little cushion while the business started. It's hugely successful. Turns out they don't need the options income anymore. Amazing, right? It took Marc working 15-hour days for many days to start the sauna business, and his wife was working alongside of him those many days. But he still found the time to take on 2 to 3 trades a week, and he said that the options trading during this period of time was super easy. He's like, it's so easy. I mean, he just pushes it away like so easy. And I make $500 to $7,500 a month. So easy. Okay. And that's how I feel about it. That's how so many people feel about it. So what are his goals now? So he's like leveled up, right, in his life, but he has more goals. And people like Marc and I do. We accomplish one thing and then we want to do another thing, because we are just like that. A lot of people think that that you're going to start trading options and you're going to quit everything you're going to do. No, people like us are just motivated, and we just move along to the next thing. Okay. So his business is up and running with great employees, and Marc knows he can easily scale his options trading up to $10,000 per month now, with the same portfolio starting amount, the $250,000, because he's going to be reinvesting some of his options income, and it's going to compound very quickly. Okay, the business is pulling in income, the sauna business, the cold plunge studio. So now, when his options income before was used to fuel his family along while he's building a new profitable business, now his options income strategy is there to help the family gain wealth. And to what purpose? Marc says he'll never stop working. He's just wild to work, but he loves the side income and possibilities it provides. And what is that possibility? It's the thing we all want. Like, I talk to millions of people all the time, not millions, but I talk to sort of like 10 traders a week to see if they want to join the program or not. And 2 a week usually do. And here's the thing. They want freedom. He says it's freedom from ever having to sit at a desk again and be told what to do ever again. He's like, now I sit at the desk and I choose to have a computer make money for me. So he doesn't have a desk job anymore. He just doesn't want to have a boss. He doesn't want to be in corporate America and have to live that schedule. Marc, also a big highlight from what I'm hearing from Marc's journey is that Marc is an entrepreneur now. He was working in corporate America. He started his own business. Guess what options trading is? It's another business. You absolutely have to look at it like it's another business. It's a little company that makes you money. That's absolutely what he's doing. So how did he do it? Okay. He worked through the program and he talked to me and the errors he was making started to dawn on him. That's exactly how it works. And here they are. Okay. So before we get into what his issues were, We're just going to go over the fact that there are four pillars for what can make a successful options trader and what the system starts with. So my options trading system for making a consistent 5-figure per month income without spending hours a week on charts or taking big risks is to make great stock selections. You have to master cover call variations. You have to do proper position management, and you have to graduate to advanced trades. Okay, so remember Mark came in knowing the wheel. So now I'm going to help you see how Mark had to clean up, and it wasn't too hard, to make a transition into something better. So one of the big things, it's always the hugest thing, is that Mark needed an improvement on his stock selections. He was making picks that weren't helping the cause, and he cleaned this up and he saved himself a lot of trouble. We're going to go into more detail on that later. Mark was selling a lot of puts. These don't work as well as calls, guys. He had access to a lot of cash, and Mark had access to $750K, but he wasn't selling as many covered calls as he needed to reach his goals. The third thing is that with his position management, he was selling too many puts to be the insurance for other traders and not using spreads and not selling enough covered calls. Okay, so he started to see that his position sizing wasn't appropriate. And then he graduated to advanced trades. So Mark leveraged the put credit spread instead of the put to give himself more downside protection, which is super smart. This is how he didn't get stung very badly in the last downturn that we just had because of tariffs. And he says, hey, his portfolio is looking great right now. This is why. Okay. So Mark's main strategy was the wheel. And again, it simply doesn't work as well as taking on other trades. It just doesn't. I've tried it, guys. I know. So let's go step by step and see how he fixed his trading into a winning system. The first thing is that he's making better stock selections. So you're struggling with inconsistent results with options trading, and 99% of the time, it's because you're trading stocks that just don't perform consistently. Okay, and this was the case with Mark. So Mark was in tech. He knows a lot about tech, and he worked for one of the big names in tech, one of the big ones, okay? And maybe he knows too much about tech because he has an educated and solid opinion on what tech companies are going to be huge 5 to 10 years from now that are sort of more like the littler companies. So Mark had to change his stock picks into stocks that are great now and not stocks that will be great later. This was a big shift. He learned that we can't speculate on stock picks for options trading, even if we know we'll be right down the road. Okay, so he's right that these companies will probably be great 10 years from now. But the problem is we need those stock picks to be good right now. When we know that those companies are going to be great 5 to 10 years from now because we have a lot of industry knowledge and we have expertise, what we do is we long-term invest in those companies, but we options trade the big girl and boy stocks that are big right now. Okay, there is a distinct difference there. You have to options trade as an options trader. You can't options trade as an investor. There are two different hats you have to wear, okay? So here's how to make great stock selections. The first thing is that you have to have a rising 5-year, 1-year, and 3-month chart. Okay, so this should be the case right now that stocks should have a rising 5-year and 1-year chart. Before you go big into positions that don't have a rising 3-month chart, after we've had this sell-off, just be patient, maybe, and wait a little bit longer, or go in lightly on those. Okay, so I would also zoom out and look at the 6-month chart. If you see the 6-month chart is positive, could be a sign that maybe you could go ahead at that. Okay, so why this matters is that when I look at a stock's 5-year, 1-year, and 3-month charts, I'm confirming that the stock is in a consistent uptrend across multiple time frames. This is all about ensuring that we are trading with the trend and not against it. It's very difficult to paddle upstream. Just don't even try to do it. What most traders don't realize is that falling stocks often keep falling and rising stocks keep rising. This simple check that you can do eliminates losing trades immediately. New hot companies often rise and fall before they consistently rise. That's the thing that was getting to Mark, is that he was selling cash secured puts on these companies that go like this because they're new. That's what they do when they're new. Okay. And selling puts when you're up here and then getting assigned down here really sucks. And it can get to you. It gets to you, believe me. So we don't want to be that trap. And Mark was in that mess. You know, he was profitable sometimes. He just wasn't consistent enough to know that he could really make the big bucks. So how to implement this strategy is so easy. You just go over to Yahoo Finance, you enter your ticker signal, and you look at the 5-year, 1-year, and 3-month charts. If all three aren't trending upward, then move on to the next stock. I will make an exception here that you can also look at the 6-month. And if that's up, then you can move ahead. This takes less than 30 seconds to do per stock, but saves you hundreds of thousands in potential losses. So you're welcome for me telling you that. Okay. Such a smart ass. Okay, number 2, we need to see rising revenues for 4 years to get into stock trading with a stock. Okay, why this matters? Okay, companies with increasing earnings and revenue for 4 consecutive years in a row demonstrate that they know how to make money in difficult market conditions. This isn't just about current profitability, it's about a proven business execution over time. Most traders look at stocks that their friends recommend or ones that are trending. And Mark was trading companies that don't have histories of being consistently able to make profits or revenues rise. And this will come out and bite you. Okay, so there's new companies, like, I'm trying to think of a good example of one right now that are in tech. Like, they could have the brightest, like sort of some of the new supercomputing stocks. They're not making any money. All they're doing is investing in supercomputing because there's so much that they have to invest to make a breakthrough. Okay, these companies could be good 10 years from now, and I hold shares in them to hold them. Okay, I don't necessarily always options trade them though. All right. Okay. So how you implement this is you go to Yahoo Finance, you click on the financials tab on the left side of the screen there, and check if both the revenue and earnings have increased each year for 4 years in a row. If there's even 1 year of decline, you got to move on. Okay. I think the only exception here would be Apple because this is the king of the stock market. I have one other thing that's escaping my mind to say right now, but let's just go back here. Mark and okay, well, maybe it'll come back to me. Okay, and 70% institutional ownership is also something that we want to look for with stock ownership. Okay, so it's really important. I remember what I was gonna say. Okay, the reason that you want to see those those earnings, profits, and revenue going up is because the traders that are the big institutional traders will look for that. They're looking for that. And if they see that there's 1 year of a decline, they're not as interested in that stock. So that's a problem because when the market sells off, they know that information immediately and they'll dump that stock first, and then you'll get caught in a trap and it's no fun. Okay, so you got to follow what the institutions do, and that is what number 3 is about. It either has to have 70% institutional ownership or it has to have a 70% float. I don't want to get too complicated here, but if you see 65% institutional ownership, but it's got a 72 float, that's fine. That means that there's trades going out and stuff like that and blah, 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 and it will work, okay? So when institutions own at least 70% of a stock, it means the smartest money managers with the most resources, i.e. money, okay, have done extensive research and have decided this company is worth investing in. They also tend to create more stability in the stock price, which will create more stability in your options income, which is what we want. Most traders never consider who else is buying the stocks that they trade options on. And the reality is that institutions determine stock prices, not retail traders. It becomes obvious over time when you start to learn this system that we should align ourselves with these powerful market forces rather than fight against them. So again, Yahoo Finance, free resource. How you implement this is you go to the Yahoo Finance page and you click on the holders tab, and then you can see the percentage of institutional ownership there. The last thing is just these stocks have to be market leaders. They just do. Like, we can't trade Adidas. It's just not the market leader. Like, if there was a market leader, it would be Nike. We can't trade Costa Coffee. We've got to trade Starbucks. Like, that's obvious, right? But you also kind of want to trade stocks that have monopoly like sizing and are just so difficult to compete with. Think about the Mag 7 minus Tesla because it has terrible earnings. And start there to start Googling some of these companies that could be a good thing to invest in. This basically translates to a more predictable stock performance, exactly what we need for options trading. A mistake people are making is that it's common to trade new companies because the premiums are high, and that's called premium chasing, and it's a bad idea. You can get away with this for a while and feel really, really clever, but karma will come to get you. Okay, so when you trade these like newer tech companies that aren't in the Mag 7, what ends up happening is you can really go on a roll for a while because the stocks might take off for sort of like a 2-3 month period of time, but then they draw back like 30% and you're like, now what am I gonna do? Well, now what you're gonna do is not make as much money. And you know it and I know it, so don't do that. Okay, so to find market leaders, you just gotta like honestly do a Google search of like the top tickers, and then you have to run them through the rest of the system. Okay, and just like think to yourself, who is a company that I just cannot live without in my life? For me, it's Amazon and Apple. Like I cannot live with them in my. I'm talking to you on an Apple computer right now, okay? And my phone's Apple, and my kid's phone's Apple. I mean, and I'm watching Apple TV and everything. Okay, Amazon, can't live without it. I just can't. So think to yourself, do these companies have unique advantages that competitors can't easily copy or compete with? And are their profit margins above their competitors? So, and is the revenue more? So a lot of times stock traders will bring me a stock and they'll be like, what do you think about this stock? And I'll look at their revenue and it will be like in the tens of millions or something like that. And I'm like, guys, what we need is billions a year, not tens of millions. We need billions. Okay. All right. So that's the thing. So Marc's breakthrough with stock picks really came when he saw how much volume exists, because he's got a brain that works like this on numbers, okay? So he saw how much volume exists in the calls and puts, in addition to the fact that they were market leaders on these huge companies. And he started to understand from his mathematical mind that it's very difficult to lose on these stocks over time. And those are his words, not mine. Time was on his side, he realized, and he has time. He's not worried about making money tomorrow, even though he will make money tomorrow. He's worried, his concern is to build this account up over time. And he's got time. Again, he's not trying to make all his money tomorrow or next day. That's day trading. He's trying to make a great income over a year. So now that he had great stock picks, it was time to show him how he could put fuel on the fire and take his baseline income generation to the next level. Okay. And this is so great because all Marc needed to do was master the covered call for the most part. You guys are going to go like, what? That is so basic. Yeah, I know it is basic. And people look over it, past it all the time. They think they're smarter than that. And I'm like, nobody's smarter than the covered call. It's such a great trade. Okay. Most options traders know how to trade covered calls in the traditional way. And the reason you think it's basic, if you're thinking that, is because you've only been taught to do it one way. And the way you were taught to do it was stupid, honestly. Okay. There are 3 main challenges with the traditional method of selling covered calls. And that is that the premiums are low. You can get assigned early. And then like you've got this risk management that you're always worried about for stupid reasons. Okay. You've been told to sell on a 20 delta, and that's like the dumbest thing I've ever heard of. Okay. So if you want to maximize your covered call premiums without additional risk, you need to master 4 different strategies of the covered call that allow you to profit in different market conditions. Okay. So Marc was just simply overlooking the power of the covered call. He previously sold puts. I see this all the time. People think they're so clever because they sell puts. And guess what? I'm here to say that you're not that clever. What's going on is that when you're trading puts in a bull market, you are costing yourself cap gains and dividends that you could get with covered calls. And that is a big mistake. Those little percentage gains that you get from cap gains and dividends add up to a shit ton of money over your lifetime. Pardon my French. It just does. It's just true. This is how I'm doing it. Okay, so Marc needed to master covered calls. Mark had learned to sell the covered call in the classic unimaginative and frankly unintelligent way that everyone talks about on YouTube. I feel like they've all watched the same video and then they're just repeating it like parrots, and they haven't put any thought into like, is this actually benefiting anyone? And I'm here to bring you new information that works better. Okay, so it goes like this. They say, sell a 20 delta and keep your shares. Ugh. Most of the time, this strategy makes no sense. So another light bulb went off for Mark when he realized he was looking at trading covered calls like an investor and not a trader. And that is what everyone is doing who's selling 20 deltas. They're trying to keep their shares. But why are you trying to keep your shares? It doesn't make any sense. Mark needed to realize he needed to be free to let his shares get called away and sell more aggressive deltas because he was stock trading, not investing. So here are some rules for success for options trading. Do not options trade your investments that you are long on, and do not get FOMO about selling options. That's it. That's the whole formula to change your life. So Mark, again, he had 500K in long-term investments that he was not going to sell covered calls against. So those are his longs. Don't try to make your options portfolio into longs as well. He allotted 250K to sell options on. So he needed to simply just get more aggressive with the deltas in that account, selling calls to reap bigger rewards in that options portfolio. So he really had the best of both worlds here. He just was thinking of his options portfolio like it should also be an investment. It's not necessarily an investment. It is a way to generate cash flow. And what you use with that cash flow, you can do to make more investments. See how that works? Pretty cool. Okay, so while your options trades, this is where it's going to get really like mind-blowing, okay? And you got to really think this through. While your options trades are not investments, in the Millionaire Mentorship Program, we only trade stocks that we want to own for 5 to 10 years. And you guys are going like, what? That makes no sense. The reason why is, again, because those are the best companies, and we only trade the best companies because it gives us the highest rate of success. Okay, so we're trading the stocks that we would want to own for 5 to 10 years, but we don't care if they get called away from us. We don't care. It's rinse and repeat. Repetition is what works. Okay, so here are the 4 trade variations on the covered call that Mark learned. I'm going to go through them. The first one is the fast money trade. Second is the volatility trade. The third is the getting paid to go up strategy. That is the 20 delta. There is a time and place for it. It's just not all the time. And then there's an earnings trade. Okay. So just to recap where Mark was at, Mark previously wasn't motivated to sell calls because the premiums were too low. This is because he was getting assigned puts underwater, and then he was selling the 20 delta like everyone else that learned from a furu who thinks the wheel is all that. Or he was just buying shares and selling the 20 delta and going like, I'm never going to make a lot of money doing this. So it was very unmotivating. That is unmotivating. I wouldn't want to do it. I mean, I'd still do it, but it doesn't sound that good to me. Okay, so the fast money trade. I love this trade. It's my favorite. It is simply my go-to strategy whenever I want to generate a significant cash flow quickly with still maintaining the possibility of getting some capital gains. So why it works is that most covered call traders make the critical mistake of selling calls that are too far out of the money. They're so afraid of having their shares called away that they accept tiny premiums. And this is just leaving money on the table, guys. All right. So how we do this trade is that we select a quality stock from our 5-point checklist. And instead of focusing on delta, we focus on the optimal balance between premium and potential capital gains. We sell calls that are just slightly out of the money. I've sold 50 deltas here, like 55s, like not a problem. Okay. I've sold 30s, I've sold 40s, but I rarely sell 20s. Okay. I choose between expiration dates that are anywhere between 14 to 30 days out for optimal time decay there. And then I'm very comfortable with the possibility of assignment, because remember, the money that I'm trying to make on this is in the premium, because the premium is high. Okay, so like if you're selling an Amazon 3-week call that is just like $1 out of the money, you are collecting $500 and some odd dollars on the covered call, and you are bringing the cost basis of those shares down $500. It's Pretty awesome. So this strategy works best when implied volatility is high, or when you quickly want to capture cash flow, when you're okay with your shares being called away for a profit. So again, guys, just be comfortable with having them called away, and then you're all good. Also, you don't have to wait for implied volatility to be high, but when it is high, you're going to see like really great profits. Okay, the second one is the volatility trade. And this is all about buying quality stocks during market dips and then selling the covered call once the price recovers. I love this trade. Okay. Most traders panic during market dips, and they either sell at a loss or they freeze up. And the volatility trade turns these dips into massive opportunities by allowing you to profit twice, once from the stock recovery and retracement, and second from the options premium. So how you implement this trade is you maintain a watch list of quality stocks from our 5-point checklist. When the market dips, you buy shares on those stocks at a discount, and then you be patient, which is something people have a problem with that I don't. Neither does Marc, okay? You wait for the stock to recover, and this is why stock selection is so important, because if you're buying a stock that has a 1-year dipping chart and you wait to buy stocks on sale, guess what? They're going to keep going on sale. And so you need to make sure that stock has a 1-year uptrending chart to be safe here, okay? Or to keep you safer, let's say. Once the stock rebounds, you're going to sell a covered call at just slightly above your purchase price. Actually, it's going to be, sorry, I'm saying that wrong. Once the stock rebounds, you're going to sell a covered call at slightly above the strike price, because your purchase price is going to be like, I don't know, $5 down from where you're selling it there. Okay. So you get to collect the stock appreciation and the options premium here. It's super cool. You could also sell the covered call at your purchase price. That would be freaking fantastic, because the premium would be ultra high. So I take back what I said. You could do it either way. Super fun. Okay, number 3, they get paid to going up strategy. So again, this is the selling the 20 delta. Okay, but there is a better way to do it, and I'm going to discuss that. So you could like have shares and sell the 20 delta and just try not to get assigned. This is a good, I'm dogging on this strategy. The only reason I'm dogging on it is because it seems to be the only thing anyone knows. And I really am here to just like obliterate that as being the best thing to do. I just don't think it is. It can be the best thing to do, but it isn't the best thing to do automatically, if you follow me. Okay. So many investors, of course, or traders are just facing a dilemma. They want to hold quality stocks for this long-term growth, but they also want current income. This strategy solves that problem by selling a far out of the money call that have a low probability of assignment. So the tip that I can give everybody here is I'll give you at the end, but it's a good one. Okay. So how you implement this strategy is you identify stocks that are already existing in your portfolio that you want to hold long-term. So for me, this is in my 401k. So I go over there for this strategy. I don't do this really in my options account. I just do it in my 401k. I sell covered calls that are far out of the money, typically like a 10 or a 20 delta. And I choose expiration dates that are 30 to 60 days to make the premiums worthwhile. And then I am prepared to roll the calls up and out if the stock rises significantly. And then I take those premiums that I get in and I buy other shares of stock, and I let those premiums compound over time in new stock ownership. Okay, there is a thing that I would say that is really something you're going to want to do here. Okay, don't sell these calls any old day. Wait for a pump in the stock and sell them that day. That's the way to do it. So patience is the name of the game here. Okay. Because there's so many people. This is the other reason I hate this trade. The way that it's taught on YouTube is they'll always be like, oh, sell a 20 delta. What, on a down day? No, that's not going to save your ass. That's going to get you in trouble. That's a terrible idea. Don't do that. Sell it on up day. Like, people will parrot the 20 delta, 20 delta, 20 delta. I'm like, is anyone telling you when to sell the 20 delta? Please do it on up days. Okay. And the last trade is like my favorite, second to the fast money trade, the earnings trade. So the earning trade takes advantage of the spike in implied volatility that occurs just before a company announces earnings, allowing you to collect inflated premiums. inflated premiums coming into our account is super great. Why it works. Options premiums increase dramatically the day leading up to the earning announcements due to this uncertainty. By selling covered calls during this period, you can collect these inflated premiums. After earnings, implied volatility typically crashes, and it's called in the stock world IV crush, causing the options to lose value rapidly, even if the stock price doesn't move very much. Even if it does move a lot, there's still a crush. Okay, so how you implement this is that you're going to be, again, buying those quality stock picks. Why do I have to keep saying this? Okay, you're going to sell covered calls 1 to 2 days before the earnings announcement. I like actually doing it the evening of, like at 2:30. The market closes for me because I'm in Chicago at 3. So at like 2:30, I'm selling these covered calls right before the earnings announcements. Okay, I choose strike prices based out on my comfort level here. Further out of the money is, safer if those shares ride up on you and you can collect a bigger cap gain, but it collects less premium. Sometimes I'm just happy to sell it right at the money because I just want a super huge premium, and that's okay too. But what's cool about these is after earnings, if the price stays the same in the stock or goes down, IV crush occurs, and you can often buy back the calls for pennies on the dollar. We just had Mag 7 earnings in our Millionaire Mentorship group 2 weeks ago, and people just absolutely crushed it on Apple and Amazon because the stocks didn't go nowhere after earnings. It was a beautiful thing. We were all celebrating. Okay, so if the stock moves against you though, and when I say against, it went up, okay? Even though I don't think that's moving against me, I think it's good. You can roll the calls up or let assignment happen because you've already collected premium plus cap gains. And if that isn't enough for you in life, what is? That should be enough for you. Okay. So obviously this strategy is only just for right before earnings. Okay. So the other thing so Marc is using all of these trades now. So he's learned to master the covered call. And I am just telling you that like when you start mastering that earnings thing, you will just notice how much higher your earnings months are than other earnings months, and you will start to do so much better. The other thing is that if you're going to do that earnings trade, you're going to want to organize your portfolio so that you don't sell covered calls that are 3 weeks out that cover the earnings time period. You're going to want to start to know when your earnings time periods are coming up and have those shares free and clear the week of earnings so you can sell options on that week. So options traders are planners. That's why we call it a business. We've got a calendar. We've got all sorts of shit going on. It's great. Okay, so Marc loves strategic rollouts because they are so profitable. That is the other thing that he learned to master. So the covered call goes hand in hand with the rollout. It's essential. I make so much money on rolling out. It's ridiculous. Like people on X are like, prove to us that you do so well. Prove it. And I'm like, well, what? Show us your trades. And I'm like, I don't trade like spreads, like to go with stock movement as much as I'm just like rolling stuff in and rolling stuff out all the time. It's not that exciting. It's so boring. And it would be like make me go to sleep, except I'm making so much money that I'm excited. Okay, so rolling is a process of closing out your current position in the covered call or a put, but let's talk about calls instead, and simultaneously opening a new one with a different strike price, expiration date, or both. Okay, this allows you to extend the profitable trades and manage challenging ones. So Marc can't believe the results of simply rolling calls. I always tell my traders this, but wow, does tracking prove this? Okay, so everyone that comes into the program needs to track their trades. If you are out there, you need to track your trades. I'm going to make a video about that soon. This is essential because you are going to start to see where your money comes from, how you're making money, what's working, what's not working. Marc said he consistently squeezes another $500 another here, another $500 there, just by rolling calls. So he just logs, those 2 to 3 trades he's doing in a week. It's just like sometimes he's just like rolling three calls he's got at once, and then it's boom, $1,500. It's exactly how this works. And these pops of $500 hitting the count really add up over time, he told me. I know they do. Okay, so how to do strategic rollouts, how you implement this is if your covered call is approaching an expiration date and is in the money, consider rolling it out to a later date. collect more premium right then and there. Make money on those assets, okay? Number 2, you can roll the same strike price or a higher one depending on your outlook on what you think is coming up, okay? In the Millionaire Mentorship Program, we also study seasonality. So we understand how seasonality works in these top quality tickers, and we have a good indication of if stocks are sort of usually going up or down in the time frame that we're rolling into, which really helps us make good choices. The third thing is that the goal is to collect additional premium while maintaining our position. So there is something to the idea that you do want to maybe keep a lot of shares when you've got a stock that's range bound. When it's just trading in a range, there is sometimes a lot of benefit to keeping those shares longer than you would otherwise on a stock that's just consistently going up, 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 because you can just make so much money on your original position. Okay. Guys, the reason this works is because these are quality stocks that we want to own long-term. Okay. They're good long-term investments. We just happen to be options trading them and not long-term investing on them. Or if we are long-term investing on them, that's in a whole different account that we don't options trade. Okay. Use these rollouts whenever you want to extend a profitable position or add to a position that's moving against you, or adjust it, okay? Okay, the last thing that we're gonna talk about is just like how Marc sells puts less often, okay? Marc realized what I always say, and that it's just that the wheel ain't all that. I also say the same thing about puts. Puts aren't all that. I understand the logic as to why they sound appealing, but they just aren't that appealing. And here's why. Selling puts in a bull market seems like free money, right? You're just like, oh, I'm going to sell this and stock's going to go up. I'm just going to get free money. Well, the opportunity cost proves that you're trading in the wrong direction. That's why it's not a good idea. Okay? Because Marc couldn't get cap gains or dividends from selling puts. Think about that one. He can't. And he does sell a lot. He does trade a lot of stocks that have dividends. So it's kind of a big deal, because like on trades on stocks like Casca, you can make like, $2,000, $2,500 a year collecting dividends. Microsoft, nice dividend. Okay. So, and you can't get those cap gains. So when you start to think about like how those percentages that are small or kind of big, depending on what options you chose and what covered call strike prices you sold and how much cap gain was built into that, it adds up to big money over years and years and years. Big money. It adds up to big money in just 1 year, but years and years and years, it does. Marc was costing himself loss percentages on returns because he just wasn't thinking about it. He just needed to hear a different perspective from me. And then he was able to right the ship. Okay. He was interested in getting these stocks on sale because that made him feel more comfortable than owning the shares. So what we did for Marc was that we showed him how if he bought better stocks, his money was just going to be safer in the market anyway, because he wasn't being speculative with the stocks that he was buying. And that was just a game changer. Now he feels so comfortable. He is a big Amazon trader. Just FYI, he loves Amazon. Okay. So, and then the last thing that we're going to talk about is that Marc uses spreads instead of puts, and he learned advanced trading. Okay. So before joining Millionaire Mentorship, Marc was using the wheel strategy mostly. And Marc learned in the Millionaire Mentorship program how to use the concept of the wheel, where we get paid to enter stock ownership. That's the whole appeal of selling a put to own a call. To own the shares to sell a call, sorry. But in the Millionaire Mentorship program, we mix things up and we think completely outside of the box, and we still like the idea of getting paid to enter stock ownership, but we do it by, your mind's going to blow right now, trading spreads and laddering out of those spreads. And that's how we do it. That sounds weird and impossible, but it's the secret sauce of the course, and it works like a dream. So Marc learned how to do this, and now he trades spreads to enter stock ownership, or just buy shares outright instead of selling puts, because puts make him the insurance for other traders, which he doesn't want to be, and neither do I. So just a summary of like, how did Mark make these great results? Okay, Mark learned to simplify his process. He was afraid almost to buy shares without selling put first to get them on sale. But that was his resistance to being burned by some bad stock picks, where you sell a put and you get assigned much lower. Once he learned how to make better stock picks, he felt great about owning these shares in solid companies. And he knew that he had a solid backbone to solid base foundation to his house to work off of. He sold covered calls as his primary base strategy and said goodbye to puts. Owning the shares no longer felt like the bottom was going to fall out from him because his stock picks were good. Mark says after switching to having a base foundation of his account in the humble covered call, this allows him to feel confident that his money is in a good place, which allows him to trade with more confidence. So before, one of the problems Mark was having was that he was trading, but sort of like on and off, because he'd sort of be like, gosh, I'm traded. I did good 1 month, but then the next month I didn't do so good. And so like, I'm not super motivated to do this all the time. Well, once he knew that his stocks were in better companies and he had these other methods, he was like, the only way I can lose is by not doing it. Okay. So his results are that Mark learned to simplify his process, saving time and worry, and simultaneously delivering much better results with a covered call being the basis for the largest share of his trades in his account. Mark took a sometimes winning, sometimes losing history and turned it into a machine that made him a 30% return in a year, trading 2 to 3 trades a week in just a couple hours a week. If that's not magic, I don't know what it is. Mark says that the program, that he originally thought of it as being a hefty investment, but he'd pay double now, knowing what he knows and knowing how much the system works, and he's a true believer. I mean, I'd be flattered, but I just know that's how it works. Okay. So for Mark's future, you guys, let's just talk about that because it's so exciting and I'm happy for him. I love the people I work with. I really do. So Mark had a busy winter building his business from scratch with his wife that became successful. Winter is their busy season. And now that spring is here, he plans on leveling up in his life and scaling his trading up, right? Because we successful people, we're always looking to do better. His new goal is 10K per month from options, which he says he can totally do because he reverse engineered the numbers. Again, he's like a numbers guy and has some engineering background and stuff like that. So what's great about options is that once you kind of master a system like this, you can figure out how to get your accounts to gross a certain amount of money over time within a range. And I agree that Mark's number is attainable, if not immediately, in just a short time. So again, Mark was trading lightly because he was really busy with working 15 hours a day. But he was like, if I just make 5K a month, then that's the pad I need, okay? Now he knows that he's got a slower period of time. His business is up and running. He's got great employees, he told me. So now he can just trade options a little bit more, say scale this to like 2 hours a week and 6 trades, and he can make double the amount of money. And he really can. He can. So with his tech brain and account size now compounding like a dream, I can't wait to check in on him next year. I really can. I love following up with these people. So if you are interested in the Millionaire Mentorship Program, this is what you get there. There is a full stock selection to identify the best companies for options trading. But that's also free on YouTube, you guys. Go look for my videos. You'll see it there, okay? There's a step-by-step training on all 7 options strategies I use to generate consistent income. There is my proprietary position management techniques about those spreads, laddering in, laddering out, to maximize profits and minimize risks. There's weekly group sessions that help you implement the system with one-on-one guidance. So we have a group call every week on Tuesdays, okay? And there's access to a private community of successful options traders and people that are learning, and we all chat in there, and we've got we can all start a subject if we're interested in talking about that, and we have a group of friends that we can chat with. You get ongoing support from me to answer your questions and implement the system. And then there's hundreds of real-time trading examples with explanations, okay? So if you want to apply for the Millionaire Mentorship Program, you do need to qualify. You do have to have a larger account size. There are other programs for smaller account sizes, but if you're interested, just book a call on the link in the description below this video, okay? The other thing is if you want to see a result from another trader, if you're thinking Marc is just a one-time off deal, he is not. You can go to the link here. That's going to flash up on the screen, and it will also be a link in below to see AJ's results. AJ was aggressively selling options, and he made $96K in 100 days trading options. So he is another student of mine, and that is something that Marc isn't going to easily be able to do now as well.